Question 1. An individual has recently opened a brokerage account and is interested in purchasing shares of a new public offering. This transaction would occur in which of the following markets? A. The secondary market. B. The third market. C. The primary market. D. The fourth market. Answer: C. The primary market. The primary market is where new issues of securities are sold to the public for the first time by issuers, often with the help of investment bankers, to raise capital. When an individual purchases shares in a new public offering, such as an initial public offering, IPO, the money goes directly to the issuing company, which is the defining characteristic of the primary market. Remember, new issues are always in the primary market, while subsequent trades among investors happen in the secondary market. Question 2. A registered representative receives an order from a customer to buy 100 shares of ABC stock at a specific price or better, but only if the stock falls to that price. This order remains active until it is filled or cancelled. This is an example of which type of order? A. A market order. B. A good till cancelled, GTC, order. C. A fill or kill, FOK, order. D. An all or none, AON, order. Answer: B. A good till cancelled, GTC, order. A good till cancelled, GTC, order remains in effect until it is either executed or cancelled by the customer. The phrase, remains active until it is filled or cancelled, is a key indicator for a GTC order, as it specifies the duration of the order beyond a single trading day. This type of order is useful for customers who wish to buy or sell at a specific price without needing to re-enter the order daily. Question 3. Which of the following statements is true regarding the taxation of municipal bonds? A. Interest income is always tax-exempt at the federal, state, and local levels. B. Interest income is generally tax-exempt at the federal level and may be tax-exempt at the state and local levels for residents of the issuing state. C. Capital gains from municipal bonds are always tax-exempt. D. Interest income is always taxable at the federal level but exempt at the state and local levels. Answer: B. Interest income is generally tax-exempt at the federal level and may be tax-exempt at the state and local levels for residents of the issuing state. The primary tax benefit of municipal bonds is that their interest income is exempt from federal income tax. Additionally, if the bondholder is a resident of the state or municipality that issued the bond, the interest income is often also exempt from state and local income taxes, a concept known as triple tax exemption. However, capital gains on municipal bonds are typically taxable, and interest from certain types of municipal bonds, like private activity bonds, may be subject to the alternative minimum tax, AMT. Always remember that municipal bond interest can be federally tax-exempt, but state and local tax exemption depends on residency. Question 4. A customer who owns preferred stock would typically expect to receive: A. Variable dividend payments based on company earnings. B. Regular, fixed dividend payments. C. Principal payments at maturity. D. Voting rights proportional to their share ownership. Answer: B. Regular, fixed dividend payments. Preferred stock is characterized by its fixed dividend payments, which are usually paid on a regular schedule, typically quarterly. Unlike common stock, preferred dividends do not fluctuate with the company's earnings and must be paid before any dividends can be distributed to common stockholders. This predictability in income is a key feature that makes preferred stock attractive to investors seeking stable returns. Question 5. Under FINRA rules, a registered representative is generally prohibited from borrowing money from a customer unless: A. The customer is a bank or an immediate family member. B. The loan is for a business purpose and disclosed to the firm. C. The customer is a sophisticated investor with a high net worth. D. The representative provides collateral for the loan. Answer: A. The customer is a bank or an immediate family member. FINRA rules generally prohibit registered representatives from borrowing money from or lending money to customers. However, there are specific exceptions. One key exception allows a representative to borrow from a customer if the customer is a financial institution regularly engaged in the business of lending, like a bank, or if the customer is an immediate family member. These exceptions are designed to prevent conflicts of interest and protect customers from potential exploitation. Question 6. Which of the following is considered a leading economic indicator? A. Gross domestic product, GDP. B. Industrial production. C. Stock market prices. D. Unemployment rate. Answer: C. Stock market prices. Leading economic indicators are economic factors that change before the economy as a whole changes, providing a forecast of future economic activity. Stock market prices are considered a leading indicator because they often anticipate changes in the economy. For instance, a rising stock market often suggests future economic expansion. In contrast, GDP and industrial production are coincident indicators, and the unemployment rate is a lagging indicator. Question 7. An investor seeks to minimize their interest rate risk but wants exposure to the bond market. Which of the following bond characteristics would best help achieve this goal? A. Long duration. B. High coupon rate. C. Short maturity. D. Callable feature. Answer: C. Short maturity. Interest rate risk, the risk that changes in interest rates will affect a bond's price, has a greater impact on bonds with longer maturities. Bonds with shorter maturities are less sensitive to interest rate fluctuations because their principal will be returned sooner, allowing reinvestment at the new rates. Therefore, an investor looking to minimize interest rate risk should opt for bonds with shorter maturities. Question 8. A mutual fund that primarily invests in short-term debt instruments and aims to maintain a stable net asset value, NAV, of $1 per share is known as A. Balanced fund. B. Growth fund. C. Money market fund. D. Bond fund. Answer: C. Money market fund. Money market funds are designed to provide investors with high liquidity and a stable net asset value, NAV, of $1 per share, though it can fluctuate. They invest in short-term, highly liquid, and low-risk debt instruments, making them suitable for investors looking for a safe place to park cash and earn modest returns. Understanding this distinction is crucial as money market funds are often treated like cash equivalents due to their stability. Question 9. An investor sells a call option on ABC stock. This investor's maximum potential gain is: A. Unlimited. B. The strike price minus the premium. C. The premium received. D. The strike price plus the premium. Answer: C. The premium received. When an investor sells, writes, a call option, they receive a premium from the buyer. This premium represents the maximum amount of money the seller can profit because if the stock price rises above the strike price, the seller is obligated to sell the shares at the strike price, potentially incurring a loss. If the option expires worthless, the seller keeps the entire premium, which is their maximum gain. Remember, options writing often involves significant risk, and understanding maximum gain/loss is vital. Question 10. All of the following are typically exempt from registration under the Securities Act of 1933, except: A. U.S. government securities. B. Municipal bonds. C. Corporate bonds. D. Commercial paper. Answer: C. Corporate bonds. The Securities Act of 1933 requires most securities to be registered with the SEC before being offered to the public, but it provides exemptions for certain types of securities. U.S. government securities, like Treasury bonds, municipal bonds, and commercial paper are generally exempt from this registration requirement due to their perceived low risk or specific issuance characteristics. Corporate bonds, however, are typically subject to the full registration process under the Act to protect investors. Question 11. Which of the following best describes the role of a transfer agent? A. Provides investment banking services for new issues. B. Facilitates the trading of securities in the secondary market. C. Maintains records of stock and bond owners and handles issuance and cancellation of certificates. D. Gives advice to investors on which securities to buy or sell. Answer: C. Maintains records of stock and bond owners and handles issuance and cancellation of certificates. A transfer agent's primary function is to keep track of who owns a company's stocks and bonds, including changes in ownership. They also issue new certificates, cancel old ones, and handle the distribution of dividends and interest payments. Think of a transfer agent as the official record keeper for a company's securities, ensuring accurate ownership records. Question 12. A customer receives a research report from their brokerage firm. According to FINRA rules, this report is considered a form of A. Correspondence. B. Institutional communication. C. Retail communication. D. Public appearance. Answer: C. Retail communication. Retail communication is defined as any written, including electronic, communication distributed or made available to more than 25 retail investors within any 30 calendar day period. Since a research report is distributed to individual customers, it falls under the definition of retail communication and is subject to specific FINRA filing and approval requirements. It's crucial to distinguish between different communication types as they have distinct regulatory obligations. Question 13. Which of the following is the most suitable recommendation for an investor seeking high current income with moderate risk? A. A growth stock mutual fund. B. A highly speculative small-cap stock. C. An investment-grade corporate bond fund. D. A zero-coupon bond. Answer: C. An investment-grade corporate bond fund. An investment-grade corporate bond fund typically provides regular interest payments, offering a steady stream of income. Investment-grade bonds are considered to have moderate risk compared to equities or speculative bonds, making them suitable for an investor seeking current income without taking on excessive risk. Growth stocks prioritize appreciation over income, speculative stocks carry high risk, and zero-coupon bonds do not pay current income. Question 14. What is the main purpose of the Securities Investor Protection Corporation, SIPC? A. To protect investors against losses resulting from poor investment decisions. B. To protect investors against broker-dealer insolvency. C. To regulate the securities markets and enforce securities laws. D. To provide insurance for bank deposits. Answer: B. To protect investors against broker-dealer insolvency. The Securities Investor Protection Corporation, SIPC, protects customer accounts from the failure of a broker-dealer, not from market losses due to poor investment decisions. SIPC covers up to $500,000 per customer, with a maximum of $250,000 in cash, in the event the broker-dealer goes bankrupt. Think of SIPC as a safety net specifically for when your brokerage firm experiences financial difficulties. Question 15. A customer wants to sell shares immediately at the best available price. Which type of order should they place? A. A limit order. B. A stop order. C. A market order. D. A stop limit order. Answer: C. A market order. A market order is an order to buy or sell a security immediately at the best available current price. When a customer wants to execute a trade immediately and at the best available price, a market order is the most appropriate choice because it prioritizes execution over a specific price. Remember, market orders guarantee execution, but not a specific price. Question 16. Which of the following would be considered a restricted person and generally prohibited from purchasing shares in an initial public offering, IPO, at the public offering price? A. An officer of the issuer. B. A registered representative of the underwriting firm. C. An institutional investor with over $50 million in assets. D. A direct family member of a mutual fund portfolio manager. Answer: B. A registered representative of the underwriting firm. FINRA Rule 5130, regarding IPOs, defines restricted persons as those who are generally prohibited from purchasing new issues at the public offering price to ensure fair distribution and prevent spinning. This category includes FINRA member firms, their employees, like registered representatives of the underwriting firm, and immediate family members of such employees. The intent is to prevent those closely associated with the offering from unfairly benefiting from the IPO's typically rapid price appreciation. Question 17. The monetary policy of the United States is primarily set by A. The U.S. Treasury Department. B. The Federal Reserve Board, FRB. C. Congress. D. The President. Answer: B. The Federal Reserve Board, FRB. The Federal Reserve Board, FRB, commonly known as the Fed, is the central bank of the United States and is responsible for setting the nation's monetary policy. The Fed uses tools like the federal funds rate, the discount rate, and open market operations to influence the money supply and credit conditions to achieve economic goals. The U.S. Treasury, in contrast, is responsible for fiscal policy. Question 18. An investor is subject to the alternative minimum tax, AMT. Which of the following investments might be less attractive due to this tax? A. U.S. Treasury bonds. B. General obligation municipal bonds. C. Certain private activity municipal bonds. D. Corporate bonds. Answer: C. Certain private activity municipal bonds. While most municipal bond interest is tax-exempt at the federal level, interest income from certain municipal bonds, particularly those classified as private activity bonds, may be subject to the alternative minimum tax, AMT. The AMT is a separate tax calculation designed to ensure that high-income taxpayers pay a minimum amount of tax, regardless of certain deductions or exclusions they might claim. This can reduce the attractiveness of these specific municipal bonds for investors subject to the AMT. Question 19. A broker-dealer that facilitates trades between institutions without taking a position in the securities is known as A. Market maker. B. Underwriter. C. Agent, or broker. D. Principal, or dealer. Answer: C. Agent, or broker. A broker-dealer acts as an agent when it facilitates trades between a buyer and a seller without taking ownership of the securities itself. In this role, the broker-dealer charges a commission for executing the trade. Conversely, when a broker-dealer acts as a principal or dealer, it trades from its own inventory, buying or selling securities for its own account and charging a markup or markdown. Knowing the difference between agent and principal roles is fundamental to understanding how broker-dealers operate and how they are compensated. Question 20. Which of the following risks is most relevant to a long-term bond investor during a period of rising inflation? A. Credit risk. B. Liquidity risk. C. Purchasing power risk. D. Reinvestment risk. Answer: C. Purchasing power risk. Purchasing power risk, also known as inflation risk, is the risk that the fixed income payments from a bond will lose their value over time due to inflation, eroding the investor's real return. During periods of rising inflation, the purchasing power of future interest payments and the bond's principal at maturity decreases, making this risk especially relevant for long-term bond investors. It's important to differentiate this from interest rate risk, which is about bond price fluctuations due to changing rates. Question 21. A customer opens an account and provides a post office box as their mailing address. Under FINRA rules, what additional information must the broker-dealer obtain? A notarized copy of a valid photo ID. B. The customer's temporary physical street address. C. The customer's permanent physical street address. D. A sworn affidavit stating the customer's residency. Answer: C. The customer's permanent physical street address. FINRA rules require that every new account record include the customer's permanent physical street address. While a post office box might be used for mailing, it does not fulfill the requirement for a physical address, which is crucial for identifying the customer and complying with anti-money laundering (AML) regulations. This information helps verify identity and residency. Question 22. A company's stock is currently trading at $50 per share. An investor who sells a naked call option with a strike price of $55 would have A. Limited profit potential and limited loss potential. B. Limited profit potential and unlimited loss potential. C. Unlimited profit potential and limited loss potential. D. Unlimited profit potential and unlimited loss potential. Answer: B. Limited profit potential and unlimited loss potential. Selling a naked call option means selling a call option without owning the underlying shares. The seller's maximum profit is limited to the premium received for selling the option. However, if the stock price rises significantly above the strike price, the seller faces unlimited loss potential because they would have to buy the shares in the open market at a higher price to deliver them at the strike price. This makes selling naked calls a very risky strategy. Question 23. A financial professional who provides investment advice for a fee but does not execute trades is most likely registered as A. Broker-dealer. B. Investment advisor. C. Transfer agent. D. Underwriter. Answer: B. Investment advisor. An investment advisor is a firm or individual that provides investment advice for compensation. Unlike broker-dealers who primarily execute trades and earn commissions, investment advisors typically charge fees for their advisory services. The key distinction is the provision of advice for a fee, which triggers registration requirements under the Investment Advisors Act of 1940. Question 24. Which of the following best describes the process of securitization? A. The conversion of a private company into a publicly traded company through an IPO. B. The pooling of financial assets and issuing new securities backed by those assets. C. The process of registering securities with the SEC for public sale. D. The creation of new derivative products based on underlying securities. Answer: B. The pooling of financial assets and issuing new securities backed by those assets. Securitization is the financial process of transforming illiquid assets, such as mortgages, auto loans, or credit card receivables, into marketable securities. These underlying assets are pooled together, and new securities, like mortgage-backed securities, or MBS, are then issued, representing claims on the cash flows generated by the pooled assets. This process allows originators to remove assets from their balance sheets and access capital. Question 25. The principal difference between a general obligation, GO, bond and a revenue bond is that A. GO bonds are backed by the full faith and credit of the issuing municipality, while revenue bonds are backed by the specific revenue generated by a project. B. GO bonds are always tax-exempt, while revenue bonds are always taxable. C. GO bonds are issued by states, while revenue bonds are issued by local municipalities. D. GO bonds do not require voter approval, while revenue bonds always do. Answer: A. GO bonds are backed by the full faith and credit of the issuing municipality, while revenue bonds are backed by the specific revenue generated by a project. The fundamental difference between general obligation, GO, bonds and revenue bonds lies in their backing. Go bonds are secured by the full taxing power and general credit of the issuing municipality, requiring voter approval because they are supported by general tax revenues. Revenue bonds, however, are backed solely by the specific revenues generated by the project they finance, such as tolls from a turnpike or user fees from a water system, and typically do not require voter approval. Understanding this distinction is crucial for assessing the security of municipal bonds.